Southern California real estate market update. It's time yet again. Every 2 weeks we run through single family and multifamily housing numbers for Los Angeles, Orange County, Riverside, San Bernardino, San Diego, and Ventura County. We are going to wrap up the numbers for November 2021. Do you remember what happened 3 years ago, November 2018? Interest rates hit their peak at the time. We're going to show you what that did to the data, and maybe we'll see something similar when interest rates start to go up yet again. And make sure you stick around to the end for median home price madness. You got to see this to believe it. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords navigate these crazy days in California and beyond. And we're here for another one of our 2-week updates. We pull the data directly from the multiple listing service so you can get the numbers before anywhere else and make important decisions on what you want to do in the housing market. Hit that like button and let's get started. And here we go, starting with the Orange County single family homes data for November 2021. Cannot wait to share this with you. Some crazy trends in the data. We are in a desperately low situation on listings, and you're gonna see this across the board throughout Southern California. So we are well beyond what I've been calling a twist, where we see the number of properties going under contract and the number of listings. We saw a twist in the data. We're well beyond that. They're not even close to each other. There are crazy low numbers. I mean, we have 500 property difference between pending sales and new listings. This is going to be a crazy, crazy thing when we start off with our spring buying season, but we're getting ahead of ourselves. Now let's go back to 2018, and you're going to see this in the single family data, and then the multifamily data, we're going to show you something else, and there's another reason behind that. But what the heck happened? You look at the white line, which is the pending sales. These are contracts written by buyers. You can see the 2018 was a record low. So what caused this? 3 years ago in November, we actually had interest rates hit their highest level in a long time. Interest rates almost crossed 5%, which still historically is a crazy, crazy low number. But that was a high for the time, and it's a ridiculously high compared to right now. You can see what happened. The market reacted immediately. So October 2018, rates were up. They peaked in November 2018, and you can see that immediately the pending sales dropped. December rates dropped again and then dropped lower and didn't get near that 5% mark again. The other interesting thing is while you see the pending sales go down, you see the listings go up. So why would that happen? Well, there's a logical explanation. Sellers say, hey, rates are going up. It's hurry up and sell before maybe values start to go down because interest rates are going up. So that is an interesting trend that you see there. But again, right now, we do not have enough inventory. So think of 2020 and that crazy end of year buying season. If some of you were looking then, well, this is nothing compared to that. We have an unbelievable record low. And Los Angeles has been pretty boring up until about the past 3 to 4 months, and now things are crazy. Now we have a twist. We have not seen that in Los Angeles, but we see the new listings are below the new escrows. And oh, what do we see there? We also see 2018. The interest rate increase in November 2018 caused pending sales to go down and cause listings to go up. So that is what happens when interest rates start to go up. And quite frankly, in this market, with these absolute madness between new listings and properties going under contract, we need rates to go up. It's going to help level things out. Riverside, again, we have not enough listings. I'm just saying the same stuff over and over. 2018, we had listings go up, but then we had properties going under contract at a record low. So you can see, and then year over year, so 2020 was still an abnormal year, but it's interesting now to compare 2021 to 2020 and see, in some cases, some of the places we're looking, pending sales are going down, but listings, where the heck is everybody? Nobody wants to sell right now, and that's causing the crazy frenzy. San Bernardino, we have a twist. Not enough inventory, San Bernardino, all throughout Southern California. The same issue, same effect in 2018 that we saw elsewhere. And even Ventura, this crazy market. In Ventura, things are moving a little differently. We saw it in about 4 or 5 months ago. Things weren't looking like they were completely falling off as far as pending listings. And you can see that they're down, but they're definitely not at a record low. Still higher than what we had in 2018. Even there in Ventura, have a case where not enough listings and escrows are sucking up all those listings. San Diego has looked a lot like Orange County, and it does look like Orange County yet again. 2018, you see that big increase in listings, decrease in escrows. 2021, you can see not enough listings, and you can see that demand is actually up. A number of properties going under contract is higher in 2021 than it was in 2020 in San Diego. And one of the few places you're going to get single family and multifamily data together to give you perspective on the whole real estate market. And we sell a lot of multifamily in addition to single family. And there's a funny trend in this data, but it doesn't quite mirror what happened with single family. In 2018, rates went up, as we discussed. And for 2 to 4 units, that's still conventional financing. And 5+, obviously commercial financing, all the rates went up. The rates went up in 2018. But what don't we see here? We don't see a big dip in pending sales. There's a reason for that. I'm going to circle back on that. But we do see the dramatic increase in listings. So sellers saying, we may be at the top of the market for value. If interest rates go up, it could affect prices. And so we have a huge number of listings in 2018. Why do we see less of an impact on the number of properties going under contract? And the real reason is the market tends to be less sensitive to a hike in interest rates on the acquisition side. A lot of folks towards the end of the year, fourth quarter in particular, are going to do a 1031 exchange. So a lot of these buyers are in that 1031 exchange time period. So they have 45 days to identify and a total of 6 months to close. So they're less sensitive to the ups and downs in interest rates. They need to spend their money or they're going to owe a big tax bill. And that's what we see here. But wait a minute, there's a dip in 2019, and you're going to see this in some of the other places we're going to show you for multifamily. What the heck, Christian? What's that? Well, that is the Tenant Protection Act of 2019, otherwise known as AB 1482. And we've released a bunch of content on that. But what that did is that put in place rent caps of 5% plus the Consumer Price Index. And it also changed just cause eviction procedures for tenants in place and requires a minimum of 1 month's relocation assistance. That law was passed in 2019 and went into effect at the beginning of 2020. I believe that's what we're seeing in the November 2019 numbers on the acquisition side. This dip we see at the end of 2019, investors weren't quite sure how this was going to play out and what effect this would have. So now, of course, we still had people in 1031 exchanges, but there were fewer people in 1031 exchanges at this point in time because we knew back then that this was coming, and there were fewer properties that were trading in the market at that time because of AB 1482. LA, we see that increase because of interest rates on the sales side. People saying, quick, let's get our property on. That was the effect in 2018. Not much of an effect in the number of properties going under contract. We do see that 2019 dip. But look at 2021. This is the closest that we have seen the number of properties under contract and the number of properties listed. We are getting into a twist in Los Angeles multifamily. The first time we saw it in single family was this month, and now we're seeing it in multifamily. This is absolutely crazy to see. This is becoming even more extreme of a seller's market in Los Angeles for multifamily. And the other interesting thing, they're still under eviction moratorium. There is the LA City and County eviction moratorium in place. Potentially the county moratorium will end at the end of January 2022, but we don't know for sure because it's been extended so many times. Riverside, again, we see that dip in 2019 in acquisitions. We see in 2021 a twist, not enough properties. So right now a bunch of investors are out there acquiring. And why might so many be writing contracts? Well, rewind back to what I said about 2018. We're back at a point where a lot of investors are doing 1031 exchanges again and need to place their funds, not to mention that they want to do it before interest rates go up. Now again, I did say that they're less sensitive, but they're definitely willing to lock in low interest rates. So the advantage for the investor is they can go ahead, do their 1031 exchange towards the end of the year, which a lot of investors want to make their change in their portfolio then, and still lock in the low interest rates. San Bernardino, you can see the effects of the 2018 increase in rates in listings, but again, didn't affect sales much. And we see 2021, demand is actually not through the roof. We don't see a record number of properties going under contract, but we see not enough inventory. So what this does is this mimics an extreme seller's market, and it is. There isn't enough inventory. And Ventura, just not enough sales to really make much in the way of heads or tails. 2019, we saw a bunch of people list. It could have been because of the Tenant Protection Act of 2019, AB 1482. But yeah, not much data here, but there's more buildings. We've done this a few times, and there's maybe only one or two. And then finally, San Diego tends to mirror Orange County in single family and multifamily. We've got crazy demand in 2021 and not enough listings in 2021, and a similar pattern in 2018 where the listings went up. These are your multifamily numbers, and the market is only getting hotter even while the temperature is supposed to be cooling down. And remember, we can't give tax or legal advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. Median home price madness continues in Southern California. We are showing you single-family condos and townhomes. We're starting off with OC, LA, and Riverside. Here we go, yet again. You can see that we are up. So it was dropping in a couple of places. In Orange County and LA, we had the median home price drop. But then here we go in November, it is back. And it is not supposed to be back. November, December, into January, the median home price is supposed to drop. That's what happens seasonally. And it's not happening this year. So we've lost our seasonality. And you can see too that in Orange County, we're actually at a new price peak, and same thing in Riverside. Los Angeles is up month over month, but had a peak in June that was slightly higher. But you can see the median home price is not behaving like it's supposed to. And the rest of the Southern California counties we cover also match the same median price madness. These three counties, San Bernardino, Ventura, and San Diego, are also up. And in fact, these three, as you can see, and all our email subscribers get these charts and can look closer and play with the data. So make sure you subscribe to the email newsletter. You can see here there were peaks in June, but we have since bypassed these and have new peaks in November. We do not get peaks in November, but in 2021, we have a new peak in November. And a reminder that property taxes in the state of California are due by December 10th. If you don't have impound accounts with your loan, then make sure you get that payment in so you're not delinquent and owe additional fees. With record low inventory and record high prices, do you think sellers will finally jump off the fence and we'll get more inventory in the market for 2022? Let us know in the comments below. Make sure you check out this playlist where we feature our every 2-week market updates. And don't forget that our middle of the month updates, we also include foreclosure data, so don't miss out. Oh, and of course, make sure you subscribe to our free weekly email newsletter where you'll be able to see all the charts you just saw and look closer at the numbers, not to mention get updates for tenants and landlords and buyers and sellers. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we appreciate you.